This is one of the top searched questions that we see on Google. Everybody wants to know, what do I have to earn at my job in order to be able to afford a home? We're going to answer that question for you here today. I'm Lindsay Blandingham with the Symphony Group at Keller Williams Louisville East. Let's get to the math. Our average homeowner in Louisville, Kentucky is buying a home about $300,000 purchase price. So let's work the math there first. At a $300,000 purchase price with approximately 5% down, 6% interest rate, which is the market average right now, you are going to pay a little bit of PMI for the first few years because you don't have 80% equity in the home. So we've accounted for that, your annual property taxes, and your annual homeowner's insurance. This is going to give you a monthly payment of about $2,200 a month. Mortgage experts say that you want to keep your mortgage payment to about 28% of your pre-tax monthly household income. So that means 28% of a monthly pre-tax income would be about $7,900 a month to afford this $2,200 mortgage payment. Or if we look at that, like a lot of people do, as an average salary number, again, this is pre-tax, pre-expenses, pre-anything that comes out of your paycheck. We're talking about an annual salary here of about $95,000. Again, this is your household combined income before taxes, before anything else comes out of your paycheck. In order to afford this $300,000 home, $95,000 annual household income pre-tax, it's also going to cost you about $20,000 to $25,000 in cash at the closing table. This is going to include your 5% down payment plus your other closing costs. You set up your escrow account and everything else. This cash to close number, we have a lot of other videos about how you can help get that number to a manageable number. So don't let cash be the barrier to getting to the closing table. If you've got a household income that looks like this, we can figure out a path to get you to this house, because there are options like having the seller help to cover those costs, getting a gift from a family member. There are a lot of opportunities out there to get this number lower, but this is an average scenario that's going to cover your down payment and your closing costs. However, not everybody needs to live in a $300,000 home. Not everybody has an income like this in their household. So I wanted to look at a second example that's going to show us, if you don't have this kind of household income, that you can still afford a home in Louisville. So if that previous scenario is just outside of the range, I totally get it. And that's the case for a lot, especially of first-time home buyers in our Louisville market. The good news is $300,000 is our average, but average means that there's a whole lot of inventory on the market available for less than $300,000. So there are plenty of homes available for folks who aren't bringing in $95,000 as their household income. That's great news for you. Let's take a look at a second scenario. This is for a $200,000 home. $200,000 can still buy you a great home in Louisville or in Southern Indiana. This is a 3.5% down payment, and I've run this as a scenario where the buyer would use an FHA loan. An FHA loan often has a little bit of a lower interest rate these days. And right now, our market is at about 5.5% for FHA buyers. FHA buyers are going to pay PMI, and obviously you're going to have to continue to pay your property taxes and your homeowner's insurance as part of your monthly payment. But this scenario has a much lower monthly cost of $1,600 per month. Now again, the same scenario holds true. A mortgage payment should be about 28% of your pre-tax monthly income, which means in our household, we need to be bringing about $5,700 pre-tax per month, or an annual salary of about $68,000 per year for your household. This is a much more approachable number, and again, this makes buying a home a much more realistic option for a lot of people. So in this scenario, with your annual salary of $68,000 in your household and a monthly payment of about $1,600 a month, you are going to have this $200,000 purchase and a cash to close number between $10,000 and $15,000. We're about $10,000 less than we were in the previous scenario. So a lot less cash is required here, And the same holds true. There are options to get this cash covered in other ways. So don't let the cash that is due as your down payment and your closing costs be your barrier to home ownership. We can find opportunities where the seller can help to cover those costs, or maybe a gift as an option. And there are certainly programs out there that would require less cash to close. This is just an average. Let's talk for a second about 28%. 28% is a statistical average. If you don't have a lot of other debts, you could probably make your mortgage payment feel comfortable a little higher, 30, 35% of your monthly income. If you carry a lot of student loan debt or car debt, you might feel more comfortable at 20 to 25%. This is just an average number. It isn't the be-all, end-all. It isn't a number that you have to stick to. It's just a guideline. And it's going to be based on the amount of other debt that you have in your life. But this is a guideline to get us to understand what you have to earn in order to buy a home in the greater Louisville market. For specific questions about your income and what you can purchase, reach out to us at symphonyrealtygroup@gmail.com.